or directly.
Okay, give me a few. Let me call you in a few. Give me a few. Just a few, I'll call you. Okay. Okay, thank you. Okay. Hello. Hope you're well. We're about to begin our class. Victor is my name. I'll be your trainer. Let me close my Bloomberg and then add my volume. So there we are. Hi. Hope everyone is okay there. So let me share my screen. Oching, welcome. At least I'm seeing you many. So today we are beginning with our first class, our first online class. So yeah, I'm seeing Nelly. Yeah, we have more guys joining the class. So we usually have this class every Tuesdays and Thursdays. So we also record the class. I hope I'm audible. And if I'm not audible, you let me know, because it's more of a very engaging class. So Victor is my name. I'm usually the trainer, TW Educational Center, Tigerwit. So for me, I've been coaching guys for the last at least 7 years. So if you want to be really good in Forex, I'm the guy you should be looking for. So, and I also sent the link to the WhatsApp group. My number is also there. Also my colleagues will be all assisting you to make sure you have a profitable journey in Forex. So let's get started. So I hope you're ready where you are with your notes, your laptop or your phone. It doesn't take much time, because I usually believe you guys out there, ladies and gents, you're very busy. So we try as much as possible to make sure we give you quality education within the shortest period of time. So that's what I'll be doing. We've been doing this. This is our 4th class, and the last 3 classes have been very successful, because at least I can say I have roughly 50 to 100 students who are trading consistently and profitably. So we can say we have a good win this year as we are about to finish. So this will be our last class mostly this year, because I also need to take a little break from trading, and also maybe get a vacation out there, go just relax. So let's get started with the introduction. So I'll be sending a lot of material on the WhatsApp group. So especially this is the first material I'll be sending, the manual. So the manual basically is to guide you on what syllabus we'll be using. It's a 51-page book, but there'll be more books, but this will be our main guide. The main guide we'll be using during our training. So first of all, for me to help you understand, most of you, of course, out there really want to know what is Forex. And Forex is one of the most exciting things I ever came across. And since then, it has completely changed my life, since everything I do, wake up, eat, drink, and sleep Forex. So it's an amazing thing, because now the whole world economy is headed online. It's digital, because as you can see, energy stocks are up, oil is at 134. You're able to know why the cost of bread is at 50 shillings, why you buy that liter of milk at what price, and so forth and so forth. Yeah, so let's get started. So what is Forex? We'll be going through, so I'll just go through what we'll be covering, the terminologies. We'll be able to understand how to calculate profits and losses. We'll be able to understand when we say we're going long, what it means, and short. We'll also touch on professional Forex trading. This is now whereby people like me and some other guys do it professionally. You can even be hired by a bank or an institution to trade for them and give you some really good money or some good capital. Of course, you can make a living out of it. So it's quite an exciting journey if you really stick to it and if you don't give up on it. So at least that one I can guarantee you can be making like really good return. And welcome. So we'll also touch on fundamental analysis. So what is fundamental analysis? Mostly these are the global macro events that happen out there. For example, COVID happened. That was a big catalyst for the market last year, because the markets really were selling. Yes, last year people lost jobs, businesses did not have money, there was no enough liquidity in the system, they had to give out cash bailouts and so forth and so forth. They had also to pump in money, I think 1.2 trillion. That was under fundamental analysis. We'll also be able to understand politics, how they affect the market, global oil prices, like right now, because demand is surging. Last year, oil hit negative 37 because there was no one buying. Half of the population was at home. So we're able to understand that every action usually has a reaction. When you wake up every day, does it rain or will it be sunny? So probabilities of will it rain or not rain, or how the weather will be, determines how you're going to wear, because we usually say dress for the weather. So we might dress very, very warm, but then it becomes very cold. You dress very cold and it becomes warm. So literally, that's what we do in Forex. Then we'll also understand price action trading analysis. So this is one of the very, very interesting and very, very amazing things to understand. Price action, let me just show you with my graph, will be something more or less like this. So don't worry about much of the lines. So let me give you a cleaner graph like USD chef here. Yes, this one is more cleaner. So this is the USD dollar versus the Swiss franc, or we can even say dollar versus euro versus the dollar. So, but basically this is the price. Whatever you're seeing here, this is what we'll be able to understand. We'll also be able to understand what really happens. Let me put this here. You'll be able to understand what these are. We usually call these an MT4. You'll be able to understand what's a bid, what's an ask, then how to enter a trade, how to get out of the trade, how to make profit, how to calculate losses, and so forth. We'll also even touch time frame analysis. You can see this one I have 4 hours. This one I also have 30 minutes, 15 minutes, and so forth and so forth. So this is what I'll be introducing. This is the MT4, or basically the trading platform we'll be using. So then apart from that, so today I just want you to see just the chart a little bit, so that because I'll be introducing you to more or less what we'll be doing on a daily basis. Because now if you're able to understand what this is all about, you'll always be able to know whether you're buying or selling and how much money you make. So that's price action, trading analysis. Then I'll also introduce you to Forex charting. So Forex charting is what I've just shown you. This is the chart. These are called charts. These are called candlesticks. Let me go maybe to what you guys really love. This is called the euro dollar. So Europe is the biggest economy. No, US is the biggest, then followed by China. So now if we combine both the euro and also the dollar, this is one of the most liquid pair that is traded very much. You can see here down here is written Euro USD. So if you combine this, almost 81% transaction of Forex take place within the Euro USD. So we're able to know when the markets are going up or going down. I can even use a longer time frame so that you're able to see. You can see Euro was really, really losing. So most likely now it should be trying to gain back what it lost. So we'll also be able to know why does the pair lose or why does the pair gain. Then I'll be using a shorter time frame, 1 hour or 30 minutes, so that at least we can be able to understand what really, really happens. We'll also be able to understand the trading volume. So on a daily basis, we usually have, you can see I've gotten a signal there of a buy on the Euro USD as at the moment. So I'm expecting after this small, this was a small fall, because midnight this day started here. So the Euro lost around 30 pips. Then now it should be trying to gain. So basically, I'll be able to help you. It's usually really, really amazing, because you can imagine all you do is sit at your computer every morning, be able to come, look at what the global events are happening, and then decide your trade. Am I going to buy or sell? Make your 50, 100 pips, maybe $20, $30, $50 a day. It's really nice because you're doing it from home. All you need is good internet connection and a good laptop. So I'll be teaching you about Forex charting. Charting is understanding how the market operates. So just a minute, let me put this on the side. Okay, let's continue. So you'll also be able to develop a Forex trading strategy. So at the end of the day, we need a strategy. Everything is about strategy. Right now, we are trying to recover. We need you back on your feet. We need you to have money in your pocket. We need you at least, to be making money, whether you're from home or from the office or wherever you are there. at least join us in this revolutionary world of trading, and it's going to change your life, because the idea is we'll be creating more and more liquidity. That is, you have more money in your pocket, and also creating a form of employment, because you'll be employing yourself from wherever you are. You only need a very good smartphone and, of course, good internet and good laptop. So I'll be able to help you understand the time frame through coming up with a very good trading strategy. We'll also come up with the trading mistakes and traps. Where do most people fail? Because over 95% usually fail in this business, and we'll be able to understand why they fail and why you should not fail. Because like us, myself, I've been in the business for the last decade plus. So at least I'll be giving you more of my experience, what I have seen over the years, and where for you to avoid making those mistakes. I'll also touch a lot on technical analysis. Technical analysis now is this MT4, or this platform I was showing. So I'll touch much on that. Then we'll come up with a trading plan. Trading plan is formulated whereby every morning you wake up, like today is on Tuesday. So every morning when you wake up, you need to come up with a trade plan between today and Friday, or if you're day trading, every day you need to have a trade setup. That's how we'll be able to formulate a trading plan. Then another very, very important topic I'll touch. Okay, just a minute. We're still having more coming on board. And then in case you have questions, you can ask. So our class is usually very much interactive. So I write here, in case of questions, kindly text questions. Yeah. So in case you have questions, because today was mostly in case of questions, kindly text. Yeah. So we are doing more of introduction today. So Sammy Jackson, welcome, and the rest. So psychology of trading. Now this is where most people fail, because this one accounts for almost 75% of trading, because you have to win in your mind to win in the market. So when you're buying, sometimes the market is selling. When you're selling, sometimes market is buying, and you're like, what's happening? Or sometimes you come in revenge because you had lost a lot of money. So we'll be dealing a lot with most of the emotions that, make you not become successful. Greed, fear, revenge, anger, resentment, your inner dimension. What do you deal with? How do you deal with your inner self when you're at your place or you are alone, wherever you are? Because once you handle your inner self, you'll be able to really, really handle trading and how the market operates. Because the markets usually are people. People are usually buying and selling. Now and then they're buying and selling. So when they're buying and selling, you should be able to take that advantage and be able to profit from the market. So today, let me just give you a little introduction. Then at least we'll call it a day. Then on Thursday, if you guys will be ready, all your accounts, we'll be continuing more with our lessons. So let's just touch on the basics. Basically, the Forex market is where banks. So banks are the biggest beneficiaries, because they have to be involved in the business. You have to take your money to the bank. Once you take your money to the bank, they are the custodian of your money. So, but now you'll go look at somewhere written Forex rates, or you'll hear they have a department called Treasury. So those Forex rates, they are quotes given. Like, for example, our banks here are usually given quotes every day. I think after every 24 hours, central bank has to send them those quotes. Then they'll add a shilling or two to be making a profit. So you'll see there, dollar, euro, pound, buy and sell. So when you want dollars, of course, they'll sell to you. So you'll be looking at the sell. If you have shillings and you want dollars, they'll be buying. Or you have dollars right now, you take them to the bank, they'll buy from you. So you look at the buy side. And then in case you have now, you need dollars, they'll sell now. Can you see? You have dollars, they'll buy from you. So you get your shilling, you make maybe you made $100 profit, and you have dollars with you. So when you take that to the bureau of the bank, they buy that dollar from you, and they're going to sell you shillings. And then now we might be having now shillings, but you need dollars. They are going to sell from you, but they'll be buying from you the shillings so that they sell for you the dollars. So more or less, that's what the business is all about. So they make a profit, of course, for every transaction. But now, when you come to the Forex market, we'll be doing this digitally. Digitally means I only need this platform and I only need this chart here. You can see I have bid and ask. And then now, of course, the brokers make a small commission out of it called a spread. So where banks, businesses, governments, investors, and traders come to exchange and speculate on currencies. Businesses usually go and bring a lot of imports. Say like you go to China, bring some goods, it might be electronics, it might be clothes or cars or whatever. So when you go out there, the businesses have to know the exchange rates of every now and then, because mostly they'll be dealing with the dollars. Governments have to know how the Forex market is working, because how do governments work? They have to control the money supply. Then we have investors and traders. Investors pump in money in the market, of course, to make a return. Traders is me and you. Whatever I'll be training you is for you to be a trader of the Forex market. So all these guys, they're coming to exchange and speculate on currencies. It's a big market. Buy, sell, buy, sell, buy, sell, buy, sell. This one wants to buy, this one wants to sell. So we are looking to buy when the prices are cheap, and of course sell when the prices are expensive. So the Forex market is also referred to as FX market, currency market, foreign exchange currency market, or foreign currency market. It's the largest and most liquid. So this turnover has gone up. It's not 5.3, you can see. Let me zoom in. So this one is now 6.6 trillion every day. It's not 5.3 because of last year, a lot of liquidity was unlocked because of COVID. Because COVID made sure businesses did not have money. People are not interested to travel. So as there's no travel or movement of goods and services, of course, liquidity will go down for the businesses. So this one has gone up. And then another thing we need to note, it is open 24 hours a day, 5 days a week, with the most important trading centers being London. So London is in the UK, but right now the UK faced Brexit. So Brexit meant they were able to get out of the European Union. They're like, we want to be independent. So they did well, meaning the currency will be gaining in a long term. But now the problem is there's not enough movement. If you're in Europe, you have to get a visa to get into the UK. In it, you're a European. So movement of goods and services in and out of the UK, it becomes hard because they had to come up with a trade agreement between them and the EU. Then another thing, most of the banks want to shift and go to France. So now there's a lot of money in the UK. There is a lot of jobs, but now there are no people to do the jobs. So somehow it's a 50-50 deal, because now they have to literally outsource for workers to go and work in the UK. Even here, they're really outsourcing nurses, doctors, and so many other people to go work there. So London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. These are mostly the important world trading centers. So I need you to understand, FX usually opens around, you'll see the time here. So it should be noted there's no central marketplace for the Forex trading. Instead, it's said to be conducted over the counter. Over the counter means is you have your internet connection wherever you are, and you're able at least to access the market and be able to trade the market. So it's not like stocks where there's no central place and no central marketplace with all orders processed like the New York Stock Exchange. Even right now, if you want to buy stocks like Safaricom stocks, EABL, or whichever, you have to go to Nairobi Stock Exchange, get a broker, get a CDS account, and then get a specialist there who will be able to assist you to buy the stocks. So you have to physically go there. But for Forex, as long as you have an internet connection wherever you are, you can be able to access the markets and make some good tunes. So another thing I need you to understand, it is a product quoted by all major banks. So literally, Forex is all about money. All we do is buy and sell money. So if you ask me what the product is, money. Euro is money. Dollar is money. Yen is money. So all the monies, all the currencies of the world, our major product is money. So it's a product quoted by all major banks, and not all banks will have the same exact price. So then the platform will take these feeds. So now we, Tigerwit, for example, are the broker. We have liquidity providers. Liquidity providers are people who provide us with money for you to be able to trade. When you trade up and down, when you withdraw $1,000 or deposit, now we are getting liquidity from bank A, bank B, bank C, and that. So we are going to get the best price on the buy and the best price on sell. And then now we'll see them here. So that's what now you'll be seeing here as bid. So this bid now is what we are getting, and this is what we'll be offering you. And when you see the difference of the two is what now we'll be calling a spread. So I want you to understand that it's a product that is quoted by all major banks. So it's the broker who is effectively transacting the trade and taking the other side of it. So they make the market for you. What they're saying is like, when I buy, someone else on the other side has to sell. When you sell, someone else has to buy. We have to always be having a balance of equilibrium. That's why you're able to see this liquidity. Can you see this movement? Let me put this down here. Yeah, this movement, for you to see this movement up and down, it's so that we have a balance of trade. That means when you're buying here, someone else has to be selling. When you're selling, someone has to be buying. So that at least we create liquidity in the market. That liquidity is what helps me and you, of course, to be able to be making money. So let's continue. So let's go to a little history of where the business began, so that at least you can see what you'll be committing to. It's a very, very interesting market. So let's go to where we all began, or where did Forex come from? So let's put this here now, because I'll be using the chart a little bit as I explain to you. So it might be a little boring, but let's have a look, because today is mostly theory, and I've said most of the classes, sometimes I'll be doing more practical than theory. But for today, since you're doing introduction, let's do more of theory. So it will be a bit boring. So here's the history in a nutshell. So in 1876, I think that was around 145 years ago, something called a gold standard was implemented. What was the gold exchange standard? The gold exchange standard, basically, it said that all paper currency, the normal currency you use, the normal paper, fiat, we call it fiat, because it's a legal tender given by the government for you to exchange goods and services, which is how basically it works. So this idea was to stabilize world currencies by pegging them to the price of gold. It was a good idea in theory, but in reality, it created a boom-bust patterns, which ultimately led to the gold standard, or the demise of the gold standard. It was dropped beginning the World War II, as major European countries did not have enough gold to support all the currency they were printing for the large military projects. So they could not have managed, because now gold is very scarce. So it's very, very rare to find gold. So they could not have managed to support all that currencies, all these paper currency with gold. So it was, so although the gold standard was ultimately dropped, the precious metal never lost its spot as the ultimate form of monetary value. So that is to mean that it's been, even today, 2,000, 5,000 years ago, gold never ever loses value. Then another thing I need you to understand about gold, we will never know up to how much gold we can ever mine in this world. So that's the beauty of gold. So the world then decided to have fixed exchange rates that resulted in the US dollar being the primary reserve. So, primary reserve, and that it could only be the only currency backed by gold. This was known as the Bretton Woods system and happened in 1944. I know it's exciting. So in 1975, 71, US declared to no longer exchange gold US dollar. So they removed now the gold from the dollar. It was called the Bretton Woods. They decided now let the dollar float on itself, means it's not backed by anything. So it was this breakdown of the Bretton Woods system that ultimately led to the mostly global acceptance of floating foreign exchange rates in 1976. And this was the birth of the current foreign currency exchange market, although it did not become electronically traded until the mid-90s. It's because that is when most of the internet was discovered. So what is it? So trading mostly relates to traders like you and me, whereby it's the speculation of price of one currency against another. If you think the euro is going to rise, you'll be looking to buy the euro, So, and then you'll be looking to buy the euro currency low, then hopefully you're going to sell it at a higher price to make a profit. And of course, if you buy the euro against the dollar and the dollar strengthens, you'll be at a losing position. So I hope you understand that. So we'll be dealing a lot with profits and losses. So it's good for you to be able to understand that this is a business like any other, but the idea is we are looking to make more profits than losses at most of the time. So it's important to be aware of the risk involved in trading Forex and not only the reward. So why is it so popular? It's so popular. So let's look at why it's so popular. So just a minute. So being a Forex trader offers the most amazing potential lifestyle. So number one, once you get to understand how Forex works, of course, you'll be making money. You'll be rolling, you'll be making good money from home. It's a skill whereby once you get it, it can change your life. You can also share it with your generation, with your family, anyone else who's interested. So it's not easy to get there, but if you're determined and disciplined, you can make it happen. So here's some of the skills we need to know to reach the market. I mean, some of the skills you need to reach your goals in the Forex market. Sorry, it's a bit hot. Okay, let's continue. So number one is ability to take a loss without being emotional. So you need to be able to learn to take a loss without being emotional, because number one, when you get into the market, you'll be facing a lot of temptations. Sometimes you're making money, sometimes you're not making money. So you need to be able to take a loss without being emotional. Confidence, you need to have to believe in yourself and your trading strategy and to have no fear. So we'll be dealing with a lot of fear and greed. So the idea is we control more or less these emotions. Dedication, you need to be able to dedicate your time, be disciplined, remain calm, and unemotional in a realm of constant temptation. That's the market. And also you need to be flexible to trade changing markets conditions successfully, and also be focused. You need to stay concentrated on your trading plan and not to stray off course. Logic, look at the market from an objective and straightforward perspective. Organization, force and reinforce trading habits. We also have patience. This is what now we'll be working on mostly, patience. To wait for only the highest probability trading strategies according to your plan. Then realism, to not think you're going to get rich quick and understand the reality of the market and trading. Then survey, to take advantage of your trading edge when it arises and to be aware of what is happening in the market at all times. So mostly this will be on fundamental analysis. We'll be looking much or more or less on that. Self-control, to not over leverage your trading account. So most people get in, want to make quick money. So I'll be teaching you a lot about risk management. You need to manage. If you're willing to lose $10 out of 1,000, that's what you'll be risking. If you want to make $20, $30 every day, so you have to always look at the risk involved, not only the reward. So as traders, what we do be looking at, we can take advantage of the high leverage and volatility of the market by learning and mastering an effective Forex trading strategy. So all we'll be doing in most of the classes, we are building a strategy. And after we build that strategy, we'll be building an effective trading plan around that strategy. And we'll be able to follow it with ice-cold discipline. So money management will be key here. Leverage is a double-edged sword, can be make you a lot of money or lose you a lot of money. So leverage is credit given. When you say leverage 1 is to 100, 1 is to 400, I'll be teaching you that. It's what helps you to make money in the Forex market. So the key to money management in Forex trading is to always know the exact dollar amount you have to risk before entering a trade and be totally okay with losing that amount, because one trader can be a loser and another trader can be a winner. So we'll talk about that later. So this is how it looks like in diagrammatic format. So you can see this as the central bank, institutional investors, commercial banks, now they're here, brokers, you and I, and then companies. So our $6.6 trillion is revolving around inside here. So it's an amazing journey, because the more you come, the more we do it, the more everyone makes money, because the more money circulates within the market. So the banks, you can see here the banks. The interbank market allows for both majority of commercial Forex transactions. You can see up here, transactions and large amounts of speculative trading each day. So most of the banks trade with billions and billions of dollars every day. Sometimes some of this trading is done on behalf of clients, or something we usually hear proprietary trading, or proprietary traders are trading banks accounts. So they are big accounts, $1 million, 2 million, 10 million, 100 million, even $1 billion amount of trades. So let's go also to companies. As I had said, goods, they pay for goods and services from foreign countries, and they'll be able to sell and be able to know the rates and how they're operating. Governments, I had talked about governments. This is more of money supply and inflation. So I'll be touching on these ones mostly. Money supply, how much money is out, how much money is in, and how much money is circulating in the economy. So the ways that, like last year when COVID hit, the government here had to lower the taxes, I think to 40%. Then they raised them later on, I think in February. So the government are also really, really much involved. Inflation and interest rates will be touching on that. So hedge funds, basically they are big institutions that trade money, or big institutions that are able to trade large portfolios for their clients. We have also individuals, investors, and even retail Forex traders. So this book I'll be giving you. So let's go now to the advantages of why you should get started with us, or why you should, enroll and really, really get this skill. So number one, it's the biggest and the largest market in the world, with volumes exceeding, we had said here, is 6.6 trillion. This means dense liquidity, which makes it easy to get in and out of position. So this is the place where at least you can make $50, $100 very fast without you having to really, really worry much. So you can also trade whenever you want. You have your laptop, you have your phone. I love it, because Monday to Friday, you're always on your phone and can make some good amount of money. There's no opening bell like the stock market. So you can enter and exit a trade whenever you want from Sunday, 5 p.m. to Friday. So for our time, it's from Sunday around 1 a.m. So up to Friday midnight. So 24/5, you have your trades with you. Ease of access. You can fund your trading account with as little as $250 as many brokers and begin trading the same day in some cases. We also have something called straight through order execution, allows you to trade at the click of a mouse. So that one, let me just explain, is just clicking this. When I click new order here, you'll see buy and sell. So once I click buy and sell, that is directly through the click of a trade. Then freedom to trade anywhere, few currencies to focus on instead of looking at so many stocks. So you can decide just to look at the dollar. Then we also have commission-free trading. Volatility also helps you to make money in the market because you can always be getting in and out of the market. So volatility. So there is no structural market bias. So the beauty of Forex, markets are always rising and they're always falling. So while the Forex market is a great market to trade, it's note that to all beginners, it carries both the potential reward and risk. So that is one of the most important things I want you to remember today. It carries both the potential reward and risk. And many people coming to the market always think of the reward and ignore the risk. So it's good to know how much risk you're putting so that you're able to know how much reward you expect. So basically, that's it for today. It was more of an introduction. So that next time we'll be dealing more with the terminologies. So I'll be sending you this book right away to the WhatsApp group so that at least you can be able to go through the introduction. So do we have any questions? I don't think we have any questions. Any questions? Any questions? Questions? So that we can link up on Thursday for those guys, of course, who are really ready to take this journey. So it's a beautiful journey. I'll also be sharing my experience to you and you'll love it. So until then, I think I'll call it a day since I have to rush off somewhere so that we can link up on Thursday. So any question, I can see a question there. Well, yeah, what time should one place their trades? It depends with the time frame.